Hello, in this video I will cover the AIRBNB. The AIRBNB expected IPO date is 10th October 2020. The company share price should be in $45 to $50 range. Company has filed its S1 to SEC and it has a lot of information there, as you can see on my screen, right? If I go, so many pages are there and you can see 180 and going on and on and on, right? So yeah, so based on this information, for sure it has these two, Brian and Joe, who started this the company. So but what I'll go over the company financial. For example, what's the total gross booking revenue, right? And for the company, out of which how much the company is keeping, what are the risks to the company, which is very important. You need to focus here, a lot of good points here. Who are the major competitors and debt, how much debt the company has it, and don't miss especially this debt, and you will surprise. At end of the video I will use the free cash flow model and then find out the fair value of the company. Let's get started without any delay. So the first line which we have is the company is the booking. Basically, when they have 8 point, so basically it's around $8 billion, right? The booking in 2015, and then it goes to 13.9 billion, then almost 21 billion. Then in 2017, 2018 it has the 29.4 billion, and then 37.9 billion in 2019. This is all annual data. So this means this amount of when people book the AIRBNB as the places, this amount of the money they get collected. But this is not everything is their revenue, right? Out of it, basically from 8 point almost over 8 billion, they're not even collecting $1 billion. They're collecting 919,000, and then from 13 billion they collect 1.6 billion, then it goes to 2.5 and so on. So this is how. So but the operating income, so this is their top line, right? So but the operating income is still negative, and it's not like and it's fair amount of negative in 2019, as you can see, is almost over $500,000, right? So that's what I have tried to plot here. So the gross booking, which you can see the total revenue they collect, it's pretty bigger, right? So that's going from here, right? It's going here. What in the green line is showing the operating margin, which is quite negative. It's going from very negative to less until 2018, but then it goes more negative in 2019, fall down. The revenue piece, as you can clearly see here, this is a huge gap in terms of the revenue. Maybe I'll change the pen to highlight, right? So there is a huge gap in terms of the revenue, what the money they collect and what the money they keep, right? So this is the only one they're keeping, but the keeping means retaining it, but still they have to cover their cost of goods sold and other operating expenditure, which I will cover that. So that's all the top information. But the main thing here, if you can see the growth rate in the booking is growing at the rate of it was growing at 2016 at 72%, but then it grows at 2017 at 51%, 41 and 28. So that's a one flag as well, if you can notice, right? Because although the gross booking is increasing, but the gross booking is increasing at the rate of the gross booking is decreasing, right? So that's not a good sign. I expect that to be increasing, and let me tell you in the next slide why I'm saying that as well. The second point is which is their revenue, even if it's been very consistent as per their booking. So it's 11.14 to 12 point something. So it's the revenue is between 11 to 12% of booking, right? So we can say here. So this is the second point. The first point is the gross booking, right? Booking is decreasing. Growth is reduced, right? So that's not a good sign. Operating margin, we already know this is reduced. And in 2019 it became worse. Yeah, if you like this video and you're new to the channel, please do subscribe and like that early smash button, because it takes a lot of time to make these kind of video. So I do appreciate that. And you may have subscribed many other places, but it's also good to have many data points from different channels, so at least you can make a good decision, right? So I really appreciate on that. Okay, let's get to the next one. One thing now, in this slide I do have some extra information. So I'm showing the gross profit, right, and the sales and other margin. So pretty much this information I have same, but if you can see this gross profit, right, the cost of goods sold. So if I reduce the cost of revenue and what they have to support in order to generate the revenue, the gross profit margin is been consistent from 55% to 58%. So I assume that so the gross profit margin is consistent, right? 55 to 58%, which is a good sign. But one thing I like to show here, the sales and marketing. Look at this, is a pretty, I believe they have started to almost 10 years ago, or at least let's say the 5 years ago, because we have this data. But still they have, look at the amount of money they are spending on sales and marketing. Look at here, 397, right? 397, 663, 817, right? 1.1, 1.6, right? A huge amount, which is as the percentage of their revenue is 40%, and then it's not declining a lot. It's 33% of $4.8 billion. That's a huge amount of money. So this means there is no economic of scale, right? This doesn't mean that they are growing and these expenditures should come down, but it's not. So another red flag which I can see is no economic of scale, right? And one more thing which I am for sure, if I am saying this, because if I'll see on the next slide, you can see here the product development cost is keep increasing. You see here, I'll just leave here so you take a snapshot. And same thing with the general and administration expenses, right? So usually when the revenue increasing, the product development, it has economic of scale, because you don't need to develop that much, right? I understand you might have some support which is consistent, but look at this, it is increasing. So no economic of scale, which seems like they have some pretty bad design. So that's pretty much. I don't want to go into the comparison of 19 and 20 fiscal year. Feel free to check it out, because we know coronavirus and all, it impact restaurant, hotel, and these, and for sure AIRBNB. So that's not a good point to look into that. Okay, so let's continue. Now this is the risk. I really want your pure attention there, because the risk is also very important as the return, right? Because return, for sure, we can't just think, okay, things goes always in the positive directions. Everybody can make a money, right, when the water flow is going up. But when the tide is down, settle up, then we know who is wearing the cloth or who's not wearing it, right? Is naked, right? So that's what risk is all about. And in this one, the first point, the risk related to this business is, the number one is the COVID, right? We know this COVID, it shattered this industry, right? So I'm not sure, before we heard a lot, okay, like social people going and living in each other. I'm not sure, will still people go and host their houses and let unknown people to live? You never know, maybe they have today corona and maybe another for sure we don't want, but maybe some other disease, right? So do we think the future will be that again? So yeah, so think from let me know, right, what you think from that perspective. Please put in the comments so we know what the community is thinking, investor community is thinking. That's one point. The second point which really I'd like to highlight here is we have incurred a net loss in each year. Look at the losses, right? So we have incurred net loss of 70 million, 16.9, 674.3, 696.9 million for the year December 2017, 18 and 19, and 9 months 2000 and year. For this fiscal year they already have this much of loss. But the main point which I am want to highlight is look at their accumulated deficit. They already have 1.4 billion and 2.1 billion debt. So pretty much is 1, 2 and 3, 3.5 billion they have a debt. 3.5 billion. That's a huge amount of money in the debt, right? So, and I'll also cover that in the next slide as well, which they have raised as well. So maybe they're just raising the money to pay off. So that can be one scenario, right? For sure, the third point, we already know their revenue growth rate has slowed, which I have already shown there. So that's a risk as well, because the global booking is decreased, right? The last point, fourth point, is also very important, the rules and regulations. Now cities restrict people for a short-term rental, right? They need to take special permission. It's not like before. So there is more restriction there. It's not ease. And some of the cities, maybe they don't allow as well. I know some of the condominiums here in our areas, they don't allow AIRBNB, right? Because they want long-term tenant. So for sure, these kind of things, it affects AIRBNB for sure. So this is a major thing to look. This is a major thing. Actually, all four are major thing from my point. Yeah, let me know what you think on that as well. And don't forget that hit that subscribe and make that like button blue. Okay. From the competitor perspective, yeah, it's also very important to know who is your competitors, right? So without we know the competitors is not. So pretty much AIRBNB, they don't have their properties, right? They just do the booking, provide the services and all. So that's pretty much their model is. So their main competitor is, look at these big names, right? Booking.com, online travel agent like Booking.com, Kayak, right? Expedia, and so on. But not only that, right? They also say we have like a TripAdvisors, all the room, Craigslist, hotels. These are their bigger competitors as well. So I think this is the number one, and both are number one actually equally. They're in booking and then hosting as well, right? Because they're eating their market, Marriott and all. The hotel business is quite capital intensive. You have to invest a lot to build a building. Good thing about the AIRBNB, they don't have that problem, right? And these another short time rental competitors in China, local computer, maybe they just host in China, but if you go in some other like India, there is Ola there, and some other company for sure they have cloned their model. So these are there as well. So the competition is there, intense competition from to AIRBNB. This is not like there's a global and there is no competition. No. Okay. Yeah, the debt I just want to highlight here is that one thing. Okay, they have $3.5 billion debt, but out of that, almost 2 billion is already due in September 2020, which they have to pay. So maybe that's, I'm thinking, one of the reason they are doing in coronavirus their IPO. Maybe they want to collect the money and just pay off the debt. Maybe they got, I'm just guessing, right? But why otherwise such in a bad time when nobody's want to travel, or why somebody wants to do this kind of IPO? Okay, which also mention if they don't do, they have restrict their sell and transfer of assets and all, which is quite normal. Okay, another thing is, yeah, which I want to highlight here as, okay, we may raise additional capital in future. They're saying they raise additional capital by diluting the share. They may issue more share just to So that's the possibility. Yes, if they issue more share, this means the pie is less, and we as investor doesn't get anything. The third thing which I also don't want to highlight is okay, their FX exchange rate. Most of their business, right, like if they mention here, approximately 60% of the business, right, in 2019, and now it less 50%, but let's assume 60% is outside US, right? So 60, let's say if 60% is non US, what does it mean? So this means major of the money amount they are collecting here, and they have to convert this money to US, right? Because that's their main books is US dollar. If US dollar goes up, this mean, and which usually the case, this mean no matter how much growth they are doing here, right? But once they do the conversion, it's been eaten by the FX. So that's another risk here, right? So in the local, they're growing, but they only have pretty much 50 or 40% the share, the market share, right? So that's another problem in the revenue as well. Okay, but if the US dollars goes down, that's for sure is another way, right? So even if they make good here, it's another bonus. So FX rate will get it better, right? Okay, so that's just want to highlight here. So these are the small things, right, we need to understand, because we are not just as a trader, at least from this channel, just you buy 1 month and sell. No, if you want to buy, I really like to buy and just leave it and don't touch it forever, right? So that's what I want. Okay, now we have look into most of things. Let me open the spreadsheet, and then let's see what should be the price if still somebody wants to go and think what should they be paying for AIRBNB. Okay, so this is my spreadsheet. So what I have here is, okay, so this is, there will be the ticker name ABNB, which I got it from their prospectus. So basically the growth, this is, I have used the 3-year CAGR growth, which is the free cash flow is growing at the rate of 66.45%, which is quite good, but there is a lot of deviation in that. And then I assume, okay, the growth rate after, and I'm declining the growth rate. If you have seen my videos in the past, then you know this is not like 66 I'm going and forever. No, I assume after 10 years the growth rate will be only almost 30%, but as you can see, the growth is decline year over years. And just for the safer side, pretty much what I have done, although I assume 66, but for the next 2 years, 21 and 22, I assume zero growth, just for the safer side, because you never know. But after 2 years, I assume then the market is doing well, but that time I don't think so. Maybe the company need more, have some more debt, or may not have that rental. So the growth I have reduced to 58, but then every year, if you can see, almost 5% I'm pretty much declining the growth rate. So so just to be conservative rather than sorry, right? So these so they will issue 2 class shares, one class A and class B. So I have combined both issue number of share and divide by a million. So these are like, assuming they get 267.43 million shares, right? Free cash flow per share is 0.36 cents, and then the debt, as you can see, what I have got it for per share basis, I got it $7.92. They have a good amount of cash right now sitting in their books, which is one, if I divide by number of shares, it's $17.02. I have taken a little bit of higher discount rate here as 13%. Some people might blow away, whoa, why you are taking such a high? There are 2 reasons for that. Usually I take the 10% discount rate, right? The reason is the very debt heavy. The future looks, at least the near future looks uncertain, and I don't have any big history. So it's not like a reputed company. So that's one of the reason I take 3% more, right? So 13%. But I'll also put 10% here, and then just for the scenario analysis to see, and then I assume after 10 year we'll sell the company at 12 times of its free cash flow, right? So yeah, once I have those numbers, then it's pretty straightforward, right? I project the free cash flow and then discount it by the rate of 13% year over year, and this is on the per share basis. Then my price using the 13% scenario is $42.13. My understanding is the as what is the prospectus, the share price will be going to be listed around $45 to $50, but you never know. If the buying start, it might go up, or maybe nobody's interested, right? So that's what it is. Just for the fun, if you want, so this is this price. Let me change the rate to 10%, because most of the people take 10% as less risk. If I take 10, then my price will come around $51 and $52. Okay, so that's the price is coming right now. So this is another scenario, right? So I believe somewhere around 45 or 50, 45 or to 42 to $50 should be okay, right? To pay for this if somebody wants to go with this model. Okay, so yeah, so that's it from this. Hopefully you like this video. Please subscribe to the channel, and yeah, let me know what you think, and don't forget to hit that like button and comment whether you want to still go and buy this or you want to pass this stock. Or let us know what you have think, and or if you're thinking from any other IPOs as well. Thank you for watching, and bye for now.